Welcome to TMS Insights. Jeremy Hook and Ben Clark bringing you a mid-reporting season update. There's been a lot going on, a lot of reports. The market's been strong. Ben, 40 years of age today. Happy birthday.
Thank you.
And
I didn't think we were going to mention that.
No, I did. For all our viewers out there, he's got the ripe old age. So with wisdom comes all of this, Ben. The market's been solid.
Yep.
The top of the market, quite choppy, but some really interesting reports giving us a lot to focus on.
Definitely. I mean, I think our market is totally disconnected from what's going on globally, as you'd expect, and there's been some wild swings in a lot of different stocks. We'll try and run through as many as we can. But, you know, as we sort of tend to say, Jeremy, in the short term, share prices will follow in the market, and in the long term, they'll take their own path based on their underlying fundamentals. And this is hopefully a time when you see the fundamentals come through.
Definitely. Well, let's get into this. So it's been a big season. Talk about a whole range of different stocks. Let's talk about A2 Milk, which has been a really good performer over the last year. A lot to be expected of companies like this once they've had such strong share price performance.
Absolutely. I mean, it had actually come back a fair way into the result, which we've seen a number of these high PE stocks do. They fell into it. I think there's some concerns about valuations and stuff. This company has delivered yet again. And look, it's a new CEO. There's still always going to be that regulatory risk with China, and we've seen other companies have been affected by it. It's very hard to predict, but the underlying theme remains the same, and the profit growth is phenomenal. The only thing I would say of A2 is the cost side of the business is definitely going to kick up in the next few years. But if they can keep growing that revenue line, all good.
Let's have a look at where you go to buy that. Wesfarmers and Woolworths have both reported in the last week, and Woolworths came back. It was a good set of numbers, but again, this goes back to expectations and what's next. And Wesfarmers just keeps chugging along, doesn't it?
Unbelievable. I mean, Wesfarmers is up, 25% in the last 6 months. And the thing I take out of Wesfarmers' result, because it's messy, there's a lot of bits being divested and sold, but the core businesses that will remain in the Wesfarmers group are in really good shape and actually accelerating.
Industrial size, Coles.
Coles, well, they'll own 10% of Coles, but Kmart, Target's really turning around, Bunnings, and what's the third one? Oh, well, the minority interest in Coles. So good shape. Woolies doing really well, announced a special dividend.
10 cents.
But again, I think you're right. I think the market was hopefully wanting a bit more.
But it's certainly in good health.
Definitely.
Yeah. Let's go to cars. We'll have a look at car sales and AP Eagers. So car sales, obviously one of the portals we've liked for a long time. A good set of numbers, Ben?
Yeah, I think so. Look, I'd say car sales came out pretty much in line. We saw some pretty erratic share price movements around it. But similar with REA that we're speaking about on the last video, what we're seeing is that even in a bit of a softer environment, they've been able to push up prices and people are having to spend a bit more on advertising to sell their car. And that's a positive for car sales. So, it's a good attribute of the business. And I thought AP Eagers had a really good result.
Particularly because the environment hasn't been front-end. To put a bit of a colour around that, we know that domestic car sales did slow at the end of the financial year.
Yes.
And that was the first time in a long time.
Absolutely. But the environment's good for them. Interest rates are very low. Unemployment's very low, and although the house price thing might affect some car sales for a while, I don't think it will last forever. But what they also did talk up in there was that they're really going to start launching financing solutions behind cars. They're going to try and take out the middleman, the lease providers. They're a pretty innovative group, so you'd sort of back them to do well on that.
No, that's good. Changing pace, BHP, what great set of numbers.
Amazing result. Again, it was one that sold off on the back of it. Yeah,
and again, factors that can influence a commodity stock may not be related to the result.
Yeah.
Obviously, iron ore price has been a bit volatile and copper had come down through July, August. So, but rude health really. Great margins, nice increase in the dividend. Balance sheet's great.
Balance sheets are superb. 16% debt to equity. They'll be getting close to debt free in another 12 months. So you'd expect some more returns to be paid out to shareholders somehow in the next couple of years. I really couldn't see anything to criticise in that result.
Okay, let's look at a couple of tech stocks that have reported really well and have moved up strongly. WiseTech, really phenomenal numbers.
Yep.
And share price movement. Altium, and we'd call it a tech stock as well, computer share, Ben.
Yeah.
So all three reported good numbers.
Yeah, and I think, again, there's this constant arm wrestle in the market about what are these businesses, how do you value these businesses, and it is hard. It's nosebleed sort of valuations, but it belies what these businesses are doing underneath the hood, which is they're pumping a lot of the revenue back into the business, so it makes them look artificially more expensive than they really are. But both are moving into potentially enormous addressable markets, and that typically it's a winner takes all scenario, and they're pushing to get there. And if they do get there, there's more upside, but they're going to be volatile along the way, as we've seen in the last couple of days.
And so just touching on each of those three, I mean, WiseTech, masses of recurring revenue, which it didn't have when it listed so much.
Yep.
99% recurring?
99% recurring revenue, less than 1% customer attrition rate.
Wow.
It's a phenomenal business. Altium is lower than that, but I think the runway for Altium's steeper. And what the market like was the CEO, and when he presented, he gave, again, a 7-year forecast. Yeah. So I love businesses that do that. Absolutely. They don't worry about next year. This is where we want to be in 5 or 7 years.
And the market likes that too. They're enthusiastic about that. And computer share, a couple of good years in a row now. So they're looking good.
I think computer share is one that looks like a good buy at the current prices. It's not overly expensive. It's growing at sort of 10 to 12% per annum.
Yeah.
It's a global business, which is really, I think, becoming more and more important these days when you're investing. So that's got a lot of good things.
Okay, telcos. Telstra surprised everybody with a better than it downgraded in June.
Yeah.
So expectations were really low.
Yep.
Result came out. It wasn't too bad. They've actually done strategically a few of the things they will probably hope to do next year. So the market rewarded that. And let's also talk about TPG, which had a massive announcement about a potential tie-up locally with the Vodafone assets.
Yeah, and I think this is the game changer. Telcos have just been appalling for a couple of years. And I think there was this view in the market that there's nothing that's going to change that sentiment.
Yeah.
And out of nowhere, so the thing, of course, is that 4 could become 3. Telstra, Optus, and then TPG/Vodafone.
And the reality is Optus, which is owned by Singtel, is the poor performer in the group.
Yep.
And the combination of data and mobile, fixed line for the Vodafone TPG type, is just a perfect marriage.
Absolutely. I think this could be an amazingly good deal for TPG. It will also probably be good for the other players in the sector. And it will also be good for Soul Patts.
Which, of course, people will remember is a substantial holder of TPG, so that's great. Keeping on moving, Ben, because we've got a few more to cover. Sydney Airport.
Yep.
Good growth in international traffic numbers.
Yep.
You can't really say it's just a solid, good growing business, isn't it?
I think it's the infrastructure business that's got to be at the top of the list if you want to own. Transurban's running into some competition issues and some government issues. Horizon's got issues with regulators
and APAs that probably won't go through.
I don't think so.
Doesn't look like that. So
Sydney, it is a business that is impossible to disrupt, and it is a business where every year the amount of people flying increases with growing populations and cheaper airfares. So it looks pretty good.
Event Hospitality. So owner of the Thredbo Hotel Group. And obviously it's got cinema assets. So divesting its cinema assets in Germany, which have been poor, increase in valuation of property, rude health at Thredbo. It's a business in really good shape.
Absolutely. I like this. Actually looks like one of the picks for me coming out of reporting season. So its fair value of its underlying property portfolio has risen to $2 billion. The market cap's about 2.4, and it made $190 million profit last year. The big driver is the hotel division, and in particular the QT hotel chain, but Ridges Hotels and Atura. So,
and the exhibition business is going well, but really they made some very strategic property assets over the last couple of years, and they're getting the results of that, I think. So smart operators. Invacare's been a long-held stock of ours. The report was mixed. It wasn't well received. Let's say that.
Yeah. Look, it's never a fun business to discuss. I mean, you do get a bit of a laugh on the call, but Unfortunately or fortunately for this business, we've had a very warm winter on the East Coast. We've also had a really good flu season in that not many people got the flu.
Yeah.
And that's led to the death rate has come in under expectations at a time when the company is investing aggressively into upgrading its facilities. So, I think reverts to the mean at some stage, unfortunately.
And we can't death defy, can we?
Yeah.
Okay, so Invacare there, that's good. Last one, QBE.
Yep.
Well, it's been a long, long time, hasn't it?
It's
But again, it looked like there was something to cheer some of the long, hard-suffering shareholders there.
Yeah, I mean, we've seen this with a number of results where the market applauded a result just because it didn't have anything bad. The result was reasonably good.
Yeah.
The company, I think, is still guarded, but it looks cheap. So
it looks cheap to me. And
at some stage, it could have a great year.
It could have a turnaround, that's right. Well, let's talk about something which has really been in the news this week. It does affect markets. Just to wind up, the political situation in Canberra's got really bizarre this week. Everybody will have seen it. The markets have pushed through though, Ben. They really haven't reacted. The currency's come off a little bit. Bond yields are a bit lower. Hard to really tie that in. It was happening anyhow.
Yeah.
But obviously not good news.
No.
The comment I would make though is corporate Australia's been used to this sort of muddling through for over a decade now and seems to be able to cope.
Yeah, I think so. I mean, look, as we're taping this, we don't, probably by the time this video goes out, we'll know who's the leader of the Liberals. And that'll give us a bit of a better idea, whether it's Scott Morrison or Peter Dutton. But, I think the concern, of course, is a shortened government probably is not going to be great for the market. But it will mean having to be a bit more careful about what stocks you're in, looking at income returns in a different way than we've had to in the past. But, as we've seen, Jeremy, this reporting season, we've seen a lot of good moves in share prices, and ultimately it will always come back to companies' profits. Hopefully the politicians can keep the economy running along nicely.
I hope so. But I really find that listening to these conference calls as we do, we find now that you're looking at quality of management in Australian companies, which is really, really good. And we've got some great companies, well run. The leadership in this country is coming from corporates, not from government, and it's at least we've got that. So.
Yeah, definitely. And there's still plenty of reasons to be optimistic, I think.
Absolutely, yeah. And that's the story. Yeah. Very good earnings growth across the board.
Definitely. And an economy which is in probably the best shape we've seen in a decade.
Yeah.
Which is, the market's at a 10-year high at the moment, effectively. Exactly. So things still look really good outlook-wise, but we are in the more mature stages of this cycle.
Yep. And we're also towards the back half. We've got a week and a bit to go in the reporting season. After it's done, we'll give you a wrap-up, but that's all for today.